Ja, herzlich willkommen zu einer neuen Ausgabe C-Talk und ich habe es heute schon mal auch angekündigt. Ich habe ein Interview mit Mogo, mit David Felle als Founder, CEO, Chairman und Director bei Mogo. Ich habe auch einen Conflict of Interest. Ich bin Aktionär und ja, das letzte Mal habe ich mit ihm vor 3,5 Jahren gesprochen und da ist halt natürlich viel passiert. David, thank you for your time. And I said in my German introduction, I have a conflict of interest. I'm a shareholder. I bought a little bit more in the last few weeks after your quarterly results, and also. But have a little bit luck before the news from 2nd April coming out, and but our last interviews was 3.5 years ago. So it was January 2020. And since this day, the company has a really rough ride from the stock exchange. When we talk in January 2020, the stock price was around $1, $1.20, $1.40,
Right.
and then now we going up in 21 up to over $15.
So hopefully you sold at 15. You bought at $1, you sold at 15, and you can buy back down here. I mean, it sounds like a perfect ride if you know what you're doing.
To be honest, I sell something is 12.66.
Okay, well that's good. I'll take that.
But not all. But not
Yeah.
all. But it was 1/3 of my position. Then,
Yeah.
but it was a unbelievable
Right.
ride. So absolutely. And I bought a little bit down when the stock price coming down.
Yeah.
But first, what was the reason why the share price going up? And second, what was the reason why the share price going down?
Yeah. Well, obviously we were back in the days. You had COVID. Obviously, things kind of fell apart. A lot of stocks obviously got crushed, panic, and then obviously the retail kind of trading frenzy took off. Things went crazy, across the board. Crypto, a whole host fintechs generally, a whole bunch of obviously stocks were doing well back in the day, and we also participated in that. I would say if you actually look at how high our stock got and our valuation relative to our revenue and scale, we were nowhere close to some of the multiples that were actually out in the marketplace. But obviously kind of participated along that. And then, since then, clearly, Mogo is not alone. Fintechs and technology companies across the board have been hit hard. I mean, obviously the Zooms, the Pelotons, many of these stocks down, 80, 90%. Some of the crypto companies, many crypto companies have gone bankrupt, right? Obviously, fintechs. We're even seeing where banks. Interestingly enough, banks obviously going out of business overnight. So, the financial service space, the tech space, layoffs across the board. We're seeing that. So obviously, Mogo, we're stock-wise clearly participated in that, but generally. I would say we kind of got ahead of the curve in terms of last year, Q1 of 2022, after those earnings. So when we reported Q1 of 2022, we essentially said to the market that we are going to focus very much on focusing on getting to profitability, improving EBITDA, and putting us on a path to that. So we kind of started that whole efficiency focus, essentially a year ago. And have made a lot of progress. Our last earnings report, Q4, that we reported showed that essentially we went from negative $5.5 million in EBITDA in Q1 to positive EBITDA in Q4. So that was actually a year ahead of what we had essentially suggested to the market that we could get to positive EBITDA. And we're continuing to focus on efficiency and drive to profitability. So lucky for us, we actually, have a business. Also, you have to look at an environment, and actually last year in 2022, in an environment in which, companies like other crypto companies, companies that were in crypto, they had their revenue fall off a cliff. Coinbase down 50+% revenue. Our revenue last year was actually up, right? So we had a more diverse business model. And now obviously we're hyper focused on profitability and efficiency, and At the same time, we also have a new product coming out, MOGOTRADE. Essentially, we've essentially pivoted away from some of our other products. So in our path on and focusing on efficiency and profitability, we've looked at every single product that we offer, challenged ourselves on we just can't be in as many products as we were, and we need to hyper-focus on the ones where we think we have the biggest opportunity, and also eliminate ones in which we're not making money or losing money. So the way we kind of describe Mogo now is we essentially, going forward, kind of have three key pillars, digital wealth being the most important one. And then we have payments through our Carta business, which is a wholly owned subsidiary. And then we have a small component of lending as well. So those are the three key pillars of the business that we're focused on.
Okay, that's interesting. I have now the presentation. It looks like that your quarterly EBITDA going really nicely up in the right direction. All this Carta, for example, and so on, it comes also with acquisition, what you're doing in the past. And Carta, I think, is more focused on Europe. I saw this by some transaction. What I say that Carta is behind, or it's not really. I don't see it, but it's in the back, and it's very interesting to see that you have different operations than before. It was more the lending business. And there was some note I find by Stockwatch and so on that some analysts say, Canada brings a new law in that they put a cap on interest rates and so on. Is this a problem for you?
I mean, lending is obviously it's a part of our business. It's not a key growth driver. Our primary focus growth-wise is payments and digital wealth. I mean, we're effectively keeping kind of a flat loan book. In fact, it's actually been declining. So it's really not a key part of our kind of go-forward business. Having said that, it still forms an important piece. Essentially, they've lowered the maximum interest rate in Canada. The government has. It hasn't come into effect yet, but essentially we think it's going to have kind of minimal impact on our business. I mean, this is just a dynamic that we're used to. We've been in this space for, the lending space for 20 years, and a whole bunch of different rule change and different fee caps and rates. It's just a normal part of the day-to-day business in that space. So we don't think anything materially out of the usual.
Okay, you can handle it.
Yeah.
Okay. Come to this digital wealth platform. So what are the plans? What you're doing exactly in this?
Right. So essentially, a couple of years ago, we acquired a company called Moka that effectively was a savings, an automated savings platform, an investing platform, similar to a robo-advisor. In the U.S., you have companies like Acorn, Wealthfront, Betterment, and so essentially a robo-advisor, and that's really for those people that kind of want to do passive investing instead of active investing. And we have what we think is a very disruptive value proposition in the Canadian market through Moka. Just to put it in perspective, in Canada, the majority of Canadians are still investing through high-rate, high-fee mutual funds. So there's about $1.8 trillion invested in mutual funds in Canada today. The average fees on those are close to 2% annually, right? Our Moka value prop essentially is one in which it automated passive investing primarily through low-cost S&P 500 ETFs, so designed to, essentially match the benchmark of the S&P 500, which that alone, obviously, 90% of fund managers underperform the S&P. So essentially it's a passive strategy in an S&P, and we charge essentially a flat rate of around $4 to $5 a month. So just to put that in perspective, if somebody invested in a mutual fund, and over a long time, right, you got to realize people are investing in these for retirement. So you can, if you're like my kids are in their 20s, so if they're investing in a mutual fund, they'll be in there for 50 plus years. So if you look at a 50-year time horizon, assuming the fund returns is in the same investments and it returns the same rate, through Moka, you'd end up with double the amount of money because of the fees. So as an example, if you had $1 million in a mutual fund today in Canada, you would pay about $20,000 a year in fees. Okay. If you had $1 million invested through Mocha, your total annual fee would be $60 versus $20,000. So it's a very disruptive value proposition. The banks still control about 93% of the assets in the Canadian. In fact, Canadian banking is the most profitable banking in the world is in the Canadian because they have these high fees. So on our digital wealth side, we have two components. We have our passive strategy with Mocha, and then we have MOGOTRADE, which is for active investors, very similar to a Robinhood. And we also have designed what we see as a very disruptive value proposition in the Canadian marketplace there as well. We are the first company in Canada to not only have zero commission, but zero FX fees, right? So there's at least one other trading app in Canada that offers zero commission, but they charge a 1.5% FX fee. The reason that matters in Canada, similar to say in Europe, there's a lot of investing happens in the U.S. market, NASDAQ and obviously the New York Stock Exchange. So Canadians have to convert their money from Canadian to U.S. dollar, and that's one of the big drivers of fees for the banks and for these trading platforms is they charge, essentially an FX fee, anywhere from 1 to 2.5%. So we've eliminated that fee. And that, if you actually look at the stats on DIY investing, 30% of users switch platforms for lower fees. So this there's never been a platform in the Canadian market that had both zero commission and zero FX fees. So consumer can open an account, zero trading fees, zero commission, zero FX fee, and and because we are building this brand new, and we already have our existing business that is generating cash flow. Our part of our moat, if you will, is being the lowest cost operator in this space and really hyper focusing on low cost and the best value proposition. And it's one in which, quite frankly, the banks actually can't compete with because of the size. Now, sure, they have margin there, and they can lower their costs and their fees. But they've built up as, once you have a legacy model and you have these existing costs, right, that's really what we're attacking. And then when you add things like AI into the mix, where essentially you've got a modern platform built with modern technology that allows for very low cost, everything automated. We can live on a very small margin, and that's what we're doing. So we're still early stages in essentially rolling out MOGOTRADE, but we're seeing a lot of positive traction in terms of signs of really good product market fit, in terms of the retention rate and the usability, users that are coming back onto the platform. So we're pretty excited about MOGOTRADE. And that really is where we're hyper-focusing now.
Okay, that's very interesting, also from my standpoint.
Yeah.
But first question to Mocha. How many users you have in Mocha?
Yeah, we have approximately 100,000 subscribers on the Mocha platform today. So just to put it in perspective how early days it is at Mogo. Today at Mogo, so between MOGOTRADE and Mocha, we have, let's call it, to keep it simple, about 100 million in assets under management or assets under administration. Wealthsimple, which you might be familiar with, they launched the first commission-free trading app in Canada. They currently have 20 billion. So we're at less than 100 million. So obviously, 10 times that is a billion, 100 times that is 10 billion, 200 times is 20 billion, which gets us to the Wealthsimple, and they're charging 1.5% FX, we charge 0 FX, and ours is a much simpler user experience. But that's Wealthsimple. But then go to the banks. The smallest bank in Canada, CIBC, has over 300 billion in assets under management and administration, and then RBC, the largest, has 1 trillion. So, we believe that the market opportunity for Mogo and our digital wealth is, we believe there's a real path to get to 50 to 100 billion, in assets under, and again, it's based on believing in the future that increasingly, especially with AI, one of the things you look at with AI is what's still going to be true 5 to 10 years from now. That's one of the questions that Jeff Bezos always says. It will still be true that consumers want lower prices and faster delivery, even with AI. Even with AI, as it relates to investing, is going to make it a lot easier for individual investors to be a lot more, selective in the investments they do and increase their chance of being successful. But you still need a platform to execute that trade. So as we say, This is a platform built for Warren Buffett. When Warren Buffett does his homework, he then looks for the simplest, lowest cost way to execute that trade, and that's exactly what MOGOTRADE is. We are the simplest, lowest cost, and most sustainable way to invest in Canada. All three of those form our unique value proposition, and one in which we think is going to be very difficult for the existing incumbents to compete with. And the other important point here is, unlike some of the other areas of business that we're in, the barriers to entry in this space is a lot higher. There's obviously very strong regulatory barriers, right? For example, in crypto, it used to be that anybody could launch a crypto platform, right? There was no regulation. Anybody could launch it, and almost anybody did, right? Now in Canada, regulation has come even to crypto, and you have to be a licensed platform. And that obviously we can talk about Coinsquare a little bit later, but the same thing in stock trading, right? You have to be a regulated platform. Also from a trust and credibility perspective, as a regulated platform, our accounts are protected up to $1 million in cash, right? Okay. Both on the registered and unregistered. So that's a lot higher. In Canada, I believe the current insurance on a bank account is around $200,000. Okay. Whereas our accounts are protected up to $1 million on the registered and another $1 million on the non-registered.
Why it is?
Well, because it's under a separate regulatory body, right?
Okay.
IROC, and they have a separate protection plan other than banks. So we're not regulated as a bank. We are regulated, but obviously the bank's brokers, right? They're same thing. They obviously have the same protection there. But I'm just saying, in today's world, trust and credibility, you're a new brand. This isn't like crypto where can I trust these guys? We're highly regulated. Obviously, it comes with protection. Again, very tight regulation. The barriers to entry in this space a lot higher than the other areas that we're in.
Okay. Two more questions to MOGOTRADE.
Yeah.
First is, which market you focus on it? Do you focus on Canadian and US market?
Yeah, just Canada. We are just focused on the Canadian market. So, again, this is a business, you take a look at Mogo today, less than 100 million market cap. We believe there's an opportunity, we can be a $10 billion plus business in the Canadian market, right?
No, but when he won't execute a trade, so can a Canadian one execute a trade?
Exactly. Yeah, you can trade TSX, NASDAQ, or New York. I mean, typically in Canada, I would estimate close to 50% of stock investing is based on the U.S. market.
Yeah, right. Okay. So that's mean also that you answered this question a little bit in the beginning. So that's mean that I am from Europe and having a Canadian broker, for example, I cannot switch to you, or not?
If you're European?
I'm a European, yes.
Yeah, no, you'd have to be a Canadian citizen to be able to open a Canadian brokerage account, yes. Right?
Shame on you.
Yeah, exactly. Yeah, so that's part of the regulatory framework, KYC, all of those things. You have to be a Canadian. Now, there are some certain questions that people go through, but generally no different than I can't open a Robinhood account from Canada, right? Okay. I can't easily open a U.S. Now, maybe there's a way to do that, but generally, that's not available.
Now, the interesting thing, I can open a account by a Canadian broker, but I cannot open an account.
Well, actually, so maybe the answer that I gave you isn't accurate. Maybe there is a way, but it's a good question. I'll have to look at it. But if you can open a brokerage account with RBC, you should be able to open a brokerage account with us as well. So. So yeah,
okay.
Let me.
Okay, and then that should be checked after.
Exactly.
But one question and this I think is also interesting for my viewers is, when you charge zero commission, zero FX, how you make money out of it?
Make it up on volume, Joe. No. So here's one of the interesting parts of the business. And if you think about where revenue is, so in what they call the DIY investing space, traditionally the revenue drivers are commission, FX fees, and then there's a whole bunch of account fees people charge too, right? An annual account fee, a maintenance fee, quarterly. There's all these fees, and everyone's got their fees that they charge. Essentially, we aren't charging really any of those. You can open up the account, put money in there, no fee, and we don't charge anything, including FX. Where we do earn revenue is actually interest. So that's the other revenue driving component of accounts, is actually interest revenue. So on the cash balance, right? So it's one of the big revenue drivers in this space is brokerages earn interest off of the cash balances in somebody's account. So if you had a $100,000 portfolio and you had $10,000 cash in there, interest is being earned on that 10,000 cash. Now, if you have zero cash, we don't earn any interest, we don't earn any revenue, right? So again, it's meant to be a very disruptive model to the existing players and incumbents, right? And but one in which, done properly, can still be a very lucrative and profitable business, especially with scale, right? And our model is not one in which we are spending money to acquire customers. It's one in which is based primarily on getting that viral referral and word of mouth, because we are putting everything into the value prop. Whereas the banks will spend $500 to $1,000 to acquire a customer. But if you think about where are we going in the future, increasingly, especially with AI, it's like, well, no, wait a minute. I'm no longer going to be swayed because I had a relationship with the bank manager to use that. I can do this, use this platform over here. It's simpler, easier, lower cost, and ultimately I'm going to end up with a lot more wealth, whether it's Mocha or with trade. So, we really are building this for the next, 5 to 10 years where things are going.
Okay, understandable. I think, and this is the big difference between Europe and Canada. I was really wondering when I come first time to Canada, go to PDEC in Toronto, and the first thing what I'm doing is go to a news store, so magazine store, and will buy all the magazines what you have about the stock market.
Right.
And I cannot find something. In Europe, I was always self-driven. So the individual make the investment decision and then go to an online bank and he execute the trade. But he pressed the buy button. In Canada, it was a long time that you have a broker, get a phone call, and buy this and that.
Right.
It's not exist in Europe the last 25 years.
Right. Yeah. And so today you've got all of those. You can have people deal with their brokers. It's an account sometime, and then the broker executes the trade. But technically, they have to get approval from the user. It can be fully managed. They charge a fee. And
to be honest, the broker business for me in Canada, and I say they have a broker account there, is dead. It's a dead man walking. The fee what they charged, this was our bank charged 30 years ago.
Right, exactly.
That's
well, and that's still the case here. I mean, you can go to one of these brokers in Canada, and as an example, I executed one trade in which, a year or so ago, I think the fee they charged me was $1,000. Okay. Well, that same trade on Mogo would have been zero.
Yeah.
Right. And they still charge that. That's still their model, right? And so it's low volume, high margin, right? And that's the same in mutual funds. The majority of Canadians don't realize the fees they're paying. That's just the fact. Which again is why Canadian banks are actually the most profitable banks in the world right now. I mean, it's a shocking stat. But the point is that I promise you that is going away, and it's going to be solutions like Mogo and Mocha, especially when the impact to the consumer is huge. If I said to you, switching to Mocha 50 years later, instead of 1 million, you'll end up with 1.1 million. You're like, well, 50 years, 100 grand, maybe it's not that big a deal. Like, I'm not going to go on my way. But if I said the same invested, instead of $1 million, you're going to end up with 2 million. You're like, well, sorry, double the amount of money? I mean, that's insane. I mean, that's the difference between maybe retiring and not retaining. I'm going to go on my way to switch, right? And I think that's part of what we're seeing increasingly is once people get smart, although there is friction in moving, there's some friction, just like we saw with the bank runs. I mean, very quickly, if people are motivated, they can take their money out tomorrow. I mean, technically, every user at RBC can submit a transfer form and transfer their entire account balance over to MOGOTRADE, and RBC can't stop them. It's my account. I can say transfer over to MOGOTRADE. So if a platform like this gets traction, it can obviously start accumulating tens of billions in assets very quickly once people find out, right? especially if they think it's going to have a dramatic impact on their retirement. And by the way, 91% of Canadians, 91% do not believe they're on track for financial retirement. And in today's economy, right, with inflation and everything else, these things are now more apparent and more impactful than ever. When things are rocking and rolling, nobody's going out of their way to save $10 when everybody's making all the money. But in today's environment, as we all know personally, if I can save some money, and it's a meaningful amount of money, I'll go my way to make that happen.
Yeah, for sure. Okay, very interesting. I switch back to one. What is your expectation for Carta Worldwide? For
Carta, yeah. So Carta is a payments business, and as you said, the majority of our business is actually in Europe. We have a few customers in Canada, but majority in Europe. That's where our main focus is, and it's a business that it's actually similar in that we are definitely, in terms of more of a low-cost provider. So if you actually compare our what we charge you customers versus what some of these bigger players are charging, they're significantly more. So again, same thing. We think there's a big opportunity there, just given the current economy we're in. We're now in a phase, if you think about it, where, especially with all this fintech challenges too, increasingly it used to be that every time you turn around, a new fintech launching, they're launching a card program, they're launching crypto, all of these things. Well, now that's not the case. Now it's more everybody's hyper focused on efficiency, profitability, managing costs. And I take a look at Mogo and what we're doing internally. The things that hit our radar are things that can save us money right away. That moves up to the top of our list. When things are rocking and rolling, you're trying to grow, efficiency and trying to save money and switch from this provider to that is not obviously a big focus. In today's economy, when it's all about profitability and efficiency, you're actually less concerned about, quite frankly, some revenue. You're more concerned about profitable revenue growth and just decreasing expenses. So I think both on the consumer side and the B2B side, any solution that helps customers and organizations lower their costs and increase their profitability is obviously where it's at.
Okay, I see last year you have a trading transaction volume of 7.3 billion.
Yeah, so it's just payment volume that goes through the platform.
Yeah, okay.
Yeah.
So, but the biggest part normally I would talk about was your press release from 2nd April. And this was that you are the major shareholder of Coinsquare, and you merge with Wonderfy and Coinsmart to the Canadians' leading platform for crypto asset trading. So, and for me is the interesting part, before it was 34% owner stake in Coinsquare, that has a value or has not a value, we don't see it, then you cannot, that is part of the Mogo. And I think after, when it's merged, everything together, it's then is a separate company. You own them approximately 14% ownership of them, and then we get a price tag on it. Then you have a notice on the stock exchange, and maybe then the people realize, wow, maybe Mogo is undervalued, or the other is so. What was this really the idea behind is for me understandable. You create a bigger platform, you create a public trading identity, and you can monetize one of your assets. So what are the plans now? What you expect? What we can expect? What the do you have an idea how is the compared to Coinbase, for example? That's the only one coming into my mind.
Yeah, so a couple of things I think that are important to understand. One is Mogo as a stock was definitely tied into the crypto space. And you asked me, why did the stock fall off? Well, as kind of crypto fell out of bed, and again, companies like Coinsquare, Voyager Digital went bankrupt, right? Obviously there's got a whole bunch of these crypto companies that literally were multi-billion-dollar businesses that went bankrupt. Companies like Coinbase, essentially, revenue falling off a cliff, literally, in half, right? Down over 50% in a year. So at some level, people were thinking, okay, well, maybe Mogo's in that same boat. As I said, our revenue actually grew last year, and we have now exited as a business. Mogo has zero crypto exposure as a business. We don't have any crypto customers, and we have no crypto on our balance sheet. The only crypto exposure that Mogo has is our investment in Coinsquare. So it's a really important point that Mogo itself doesn't actually have crypto exposure, but it does through its investment in Coinsquare. What's also important to know is Coinsquare is the only regulated crypto platform in North America, right? So the big difference between Coinsquare and Coinbase is Coinbase, every day you're hearing something about them where they're potentially planning moving to Europe. I think they're even suing the SEC now. And they're asking for regulation, and they're just not doing it. So Canada, luckily, is actually a lot further ahead, and Coinsquare was the first platform that's been fully regulated, and it's regulated by the same regulators that regulate brokers. So it actually comes with that same $1 million protection that I mentioned as well. So trust and credibility now is a regulated platform. And as far as I know, it might even be one of the only fully regulated platforms in the world, just given where Canada is. So anyway, so that's one. Having said that, obviously crypto has still fallen significantly. There's a whole bunch of players out there, and given today's market environment, it's all about scale and getting to profitability. So it's a smart move that a couple of the big players come together, get more scale, more efficiency, bring your costs down, more customers. More assets, more cash, and also become a regulated platform. And because Coinsquare was the first regulated, that's obviously one of the key things they have to bring to the table, right? Everybody essentially now is like, obviously, hell, I better get into being a regulated. So this is, I think, the start of that. And these three companies come together. Obviously, the merger itself has not closed yet, but that is the plan. And it's going to be have a lot more scale, more cash on the balance sheet, and obviously a better position to, essentially be the leading, full crypto platform in the Canadian market, in our opinion.
How the crypto business or the coin Square running this year? We saw a big move in Bitcoin and Co. the last 6 months. So we have a big rebound. They do also well in the banking crisis, what we have 2 months ago. So where the banks going bankrupt in US, they're doing well. So it looks like that the new asset class is really accepted now by the market. So how the business run at your company, Coinsquare, as your company. Your company is you have only your biggest or the biggest shareholder there.
So I think you've touched on the general item, which is obviously Bitcoin coming back. I mean, rebounding 60-70% up this year. So obviously doing well from there. But that is clearly Bitcoin versus the other cryptos. So there's no question volumes are still down, but I think seeing how resilient Bitcoin has been, and obviously that thesis for crypto itself long term, especially given as you're saying some of the things we're seeing with banking, etc., obviously continues to be, I would say, especially as it relates to Bitcoin, largely intact in terms of the opportunity there. But I think we've all seen that, crypto is one of these spaces that clearly can be really hot and really cold. And we're clearly, obviously, on the colder side now. So I think, the most important thing is, making the right decisions for the business, obviously getting the right scale, getting financially sound, adjusting your costs so that you can be profitable on a much lower base, and being in a position of strength, when that kind of upturn comes, right? And I think one of the challenges when things were rocking and rolling is, everybody just, it's all they could do to even handle the business. I mean, they couldn't even deal with the operational complexities, compliance, all these things. So in a lot of ways, this obviously is very healthy in terms of getting things, solid, compliant, trustworthy, and I think that's going to form a new foundation for kind of crypto going forward, right? Especially in Canada with the regulatory framework.
When is the plan that the merger is closed or will be closed?
Yeah, I forget the exact date, but within the next few months, is my understanding, is the hope that this will be complete.
Yeah, it's always also a question how fast is the regulations.
Exactly. Exactly.
Uh, do you think, or is there idea what the combined company can be can have, which value they can have?
Sorry, what's the question?
Yeah, the combined company,
Yeah.
the three company. Is there expectation what the market cap can be when they start on together on the market?
Well, I mean, hard to say. I mean, obviously, you saw Wonderfy, the stock itself, obviously had a bump, since this was announced. And the nice thing is, and you already mentioned it, is as it relates to Mogo shareholders, this will now be something which everybody can place a real value on it, right? Versus it was a stake in a private company that obviously also, as a private company, no real liquidity. So this obviously is going to be public, and now there's going to be an easy way for people to understand exactly what the value of our stake is. And hard to say ultimately what that valuation is going to be when everything settles. Right?
Okay. Last question. I think you have roughly 75 million shares outstanding. Is this correct?
Yeah, I think that's roughly.
That was the last
accurate,
number. The last number what I saw on Stock Watch. What are the expectation for 23 from the numbers, revenue, EBITDA, or something? Do you have a guidance?
Well, so the only thing we've really said to the market is we're going to continue to focus on sequential EBITDA improvement, and our goal is to get to cash flow positive ASAP. So we are hyper focused on that. We continue to make good progress. Obviously, we haven't reported Q1 yet, so that's coming up in a couple of weeks. And what I can say is, again, the team is heads down executing on all kind of profitability initiatives, getting lean and mean, very similar to the whole kind of Mark Zuckerberg, year of efficiency. Now, what we're trying to do is that is our number one. We kind of manage the business based on OKRs, objectives and key results. That is our number one OKR, but our number two is essentially getting product market fit with MOGOTRADE, our new product. And so we're doing that as well, and that's our number two. And obviously, we are investing in that product. So this is a business that if we weren't developing a product like MOGOTRADE and building that out, we obviously would be more profitable today because we are still investing in what we believe is a massive long-term growth opportunity. So, we're not specifically giving guidance other than our continued focus on getting to cash flow positive ASAP and continue to incrementally improve EBITDA on a quarterly basis.
Okay. But also, when I always look on your balance sheet, you have from the previous merger some investments. What are your plans with these investments, or this sometimes private companies, or the mostly of them are privates? Do you looking always to de-invest now, or is it a rough time for them? Then most of them are from the techno space.
Yeah. Yeah, I mean, our goal there is to continue to be opportunistic and manage those, appropriately. Some of those investments, are doing better than others, and therefore there could very well be some real opportunities to monetize some of those that actually make sense. But, generally we are, remain kind of focused and going to be opportunistic, and we are spending some time around those and looking for those opportunities. If and when they make sense, and obviously monetizing and having more cash in our balance sheet in today's environment, that matters, right?
Okay, David, thank you for the update. It was a great one. We talk around 40 minutes.
Okay,
so
good.
Really long one, but I must really say it's really exciting, especially with this MOGOTRADE, all the wealth management product around, and very interesting. And also the Carta Worldwide. I think it was really a smart move when you buy this company. I think this can really a big push for the company. It's really great.
Yeah. Well, listen, I appreciate the opportunity to chat with you, and look forward to
hopefully we can do
updating
it.
you sooner than 3 years.
That would be great. Yeah, that would be great. But it was not possible, really. It just was. But it was an interesting last 3 years, I must really say. So
Yeah, exactly.
It gives us
to put it mildly.
Yeah, it was really a nice uptrend. So maybe we
Yeah,
can down
exactly.
this.
That's right, exactly.
Okay, thank you.
Okay.
Have a good day.
Yeah, good talking with
you. Hear you soon. Thank you.
Okay,
Bye.
bye.
Ja, das war ein Update von Mogo. Ganz spannend. Nur kurz hier, er tut also erstens mal ist der Fokus auf natürlich Profitabilität. Man sieht selten, die letzten Quartale deutlich nach oben gegangen. Sie haben auch vor einem Jahr beschlossen, sie müssen effizienter werden, haben auch einen Haufen Mitarbeiter entlassen und haben ihre Kosten massiv gesenkt. Das sieht man hier und dadurch ist auch nur das EBITDA nach oben gegangen. Sie wollen sich eigentlich auf 3 Sachen konzentrieren: Digital Wealth, Payments und Digital Lending. Digital Lending gibt es eine neue Regelung von den Kanada, dass sie Höchstzinsen nur bezahlen dürfen, also verlangen dürfen. Sie sagen, das ist allerdings auch ein Business, das sie halt immer schon gemacht haben und sie haben immer Anpassungen gehabt und so weiter. Und ja, das ist halt einfach ganz normal. Das zweite ist, und das ist wirklich eine ganz interessante Sache, Digital Wealth heißt Active Investment mit einem Brokerage, das heißt MOGOTRADE, und Passiv investieren wie mit Moka. Moka ist sozusagen ein Sparplan. Ich sage es jetzt einmal. Was allerdings ein Algorithmus dahinter hat, die Kosten sind, glaube ich, 3 oder 5 Dollar, hat er gesagt, im Jahr, also maximal $60. Das macht, sie haben auch eine Logik dahinter, so dass man quasi den Markt, dass man gleich wie der Markt ist, beziehungsweise eben im Markt leicht schlägt. Damit ist man besser wie 90% aller Fondsmanager, wie er sagt. Dieser Unterschied, was die Kosten sind, vor allem bei den Gebühren der Banken, die Banken sind in Kanada scheinbar die profitabelsten der Welt, sie verlangen Unsummen von Kosten, dass die quasi dort halt viel Kosten verlangen. Er sagt, der Unterschied ist, wenn das einer über seinen Lebenszyklus ist, also er fängt an als 20-Jähriger und spart dann an für 40, 50 Jahren, macht es teilweise einen Unterschied vom doppelten Ertrag. Das heißt, wenn am Ende 1 Million rauskommen können, dann kommt bei einer 2 Millionen raus. Nicht, weil der Stock besser performt hat oder die ETF besser performt haben, nein, weil die Gebühren geringer sind. Und das ist eigentlich der Unterschied. Es klingt vielleicht übertrieben, ist es allerdings nicht durch den Zinseszinseffekt. Denn das Geld, was nicht investiert ist, sondern gebührensgezahlt worden ist, zieht es dort natürlich am Ende richtig rauf. Schmeißen Sie das einmal in eine Excel rein, da schauen Sie mal, was das ausmacht, wenn Sie da jedes Mal statt $500 im Jahr oder $1.000 im Jahr Gebühren nur $60 im Jahr Gebühr zahlen, dann sind diese $940, die sie da zahlen, macht zwar auf die Summe nur 40.000, 50.000 aus, aber mit der Performance ist man da schneller mal auf ein paar 100.000. Das Spannendste ist MOGOTRADE natürlich, 0 Gebühren, 0 FX-Zinsen. Ich habe auch dann gleich mal gefragt, kann ich als Europäer ein Ding aufmachen? Er sagt nicht. Ich habe dann gesagt, ich habe aber einen Account bei einem kanadischen Broker, warum kann ich dann nicht bei Jänner was machen? Er sagt, naja, das müssen wir sich anschauen. Das finde ich nämlich extrem spannend. Natürlich Handel nur in Nordamerika, reicht mir vollkommen. Weil 0 ist halt einfach nicht zu schlagen. Und ich habe gesagt, wie verdienen Sie dann Geld? Er sagt zum Beispiel, eine Sache, wo Sie auf jeden Fall Geld verdienen, ist bei den Zinsen, Interests. Das heißt, wenn du jetzt, nehmen wir an, ein Depot haben von 100.000, 10.000 liegen da, dann kriegt man dafür Zinsen und diese Zinsen quasi, die sind ihre Gebühren, ist man voll investiert, verdient man natürlich nichts. Ganz spannend, dann nur Carta Worldwide, das ist eigentlich eine B2B-Abwicklungsplattform, die letztes Jahr ein Transaktionsvolumen von 7,3 Milliarden gehabt hat. Alpay, Payfair und Sodexo, die stehen, oder Carta Worldwide steht hinter diesen 3, wo die Abwicklung machen. Low Grade, Low Margin Business, aber er sagt, wenn man das alles effizient gestaltet, dann funktioniert das gut. Was auch hier ein Thema ist bei diesem, so haben wir da, MOGOTRADE ist die AI, also die Artificial Intelligence, die wird eigentlich hier ein Riesentreiber werden. Immer mehr Leute fangen auch in Kanada an, selber die Entscheidungen zu treffen, hören nicht auf einen Broker oder beziehungsweise sind nicht mehr an dem gebunden, sondern sie treffen selber Investitionsentscheidungen. Das wollen sie halt einfach billig machen. Was auch dann nur das Thema war, sie haben ja am 2. April den Merger angekündigt von Coinsquare, Wonderfy und Coinsmart, wobei Wonderfy und auch Coinsmart börsennotiert sind, dass sie mergen zu einer Kryptobörse. Coinsquare, wo sie mit 34% der größte Aktionär sind, ist eine registrierte oder von der Finanzmarktaufsicht bei denen registrierte und voll regulierte Kryptobörse und möglicherweise sogar die einzige voll regulierte Kryptobörse, die sie gibt auf der Welt, möglicherweise in Kanada auf jeden Fall. Und das ist natürlich ein Riesenvorteil für Eure. Ja, das war ein langes Interview, 46 Minuten haben wir schon. Ich glaube, es reicht. Ich wünsche euch einen schönen Abend noch und wir hören Sie in Kürze. Tschüss und Baba. Viert euch, das war am 25. April 2023. Mogo Inc. Tschüss und Baba. Viert euch.